Across Kenya's 47 counties, ability is everywhere, but opportunity is not. In 2025, bright but economically vulnerable students sat for the Kenya Junior Secondary Education Assessment, knowing that performance alone would not be enough. In many homes across Kenya, this is where the story stops. But every year, thousands of young people refuse to let it end there. Through the KCB Scholars Program, 1,000 students are selected each year, not because their lives are easy, but because their potential is undeniable. Slots are reserved for learners from marginalized communities, children living with disabilities, and talented young athletes whose dreams stretch beyond the field. For these students, education is no longer a distant dream, it is a beginning. For the
Being a student athlete is interesting, juggling between engineering, which is a course that has a lot of content, and rallying during the weekends. The mother and daughter dynamic in the car, it's clear that I'm the driver and she's the co-driver, and we both respect each other's rules. Growing up, I spent a lot of time around my parents, so I've been quite comfortable around them. So transitioning from that into the car, it hasn't been much of a challenge.
When we're in the car, the mother-daughter thing is mom-daughter. When you close the doors, you navigate a driver. So you have to have that sync where you're listening. I'm listening to her. Then when we start driving, she needs to listen to me now when she's driving.
I am a project manager at our family business, Samani Construction. Between work and rallying, a lot of stuff that's common, a lot of skills that kind of balance between the two. I bumped into Deep after he came back from the US. For the past, I think, 5 years or 6 years, we've been together. It's been a really fun journey. Again, we've won several championships together. Most recently, the ARC3 champions.
Mimi ni mkulima. We do coffee farming and dairy cattle. Nikhil being a paraplegic, so he's paralyzed from the waist down. All his controls are on the hands. For me, in the car, how I help him is a call, like when I write the notes, like pull or something like that.
Being an aeronautical engineer does help with regards to understanding your car mechanically. Myself, I'm very keen to understand how systems work. Once I understand, it's easy to then respect the system as you operate it. I really enjoyed last year. As much as we didn't win the championship, we won the races that we participated in. The sweet ones is when you really have to fight to make it to the top.
It's about trust. Over the years, you build a trust, you build a chemistry. It's about understanding one another. There is no blame game between me and Karan in the car. If I make a mistake, it's we made a mistake. If he makes a mistake, it's we make a mistake.
I own a metal fabrication company and aluminium fabrication company. I also own a car detailing center. Safari Rally, the terrain is very different. There's a lot of sand. There are a lot of stones. So that is one thing that I can tell you really scares.
Me and Oscar, first of all, we need to sync to make sure that his life is safe and the team is happy. I make sure my pace notes are on point, no mistakes. It is always hard to bring the driver down because for them they think it is always maximum.
Apart from racing, professionally, I'm a merchandiser. I love games and anything related to engines. Rally is about consistency, it's about growth, it's about discipline. Once I'm in the car, my goal is to give the best performance that I can.
Sitting down with Queen and learning about the method she used as a co-driver was inspiring, shaping, and elevating our performance to where we are today.
Very thankful for the support we've had from the KCB group.
Without the support, it would have been very difficult for us to even contend for the title last year.
Is more than a corporate for us. It's family.
It's motivating also to see them supporting women in different spheres.
They've come in and saved us big time. I am truly, truly grateful to BPR Rwanda for believing in me from the very, very beginning.
It's amazing to us. We'll try our best to remain at the top.
Across Kenya's 47 counties, ability is everywhere, but opportunity is not. In 2025, bright but economically vulnerable students sat for the Kenya Junior Secondary Education Assessment, knowing that performance alone would not be enough. In many homes across Kenya, this is where the story stops. But every year, thousands of young people refuse to let it end there. Through the KCB Scholars Program, 1,000 students are selected each year, not because their lives are easy, but because their potential is undeniable. Slots are reserved for learners from marginalized communities, children living with disabilities, and talented young athletes whose dreams stretch beyond the field. For these students, education is no longer a distant dream, it is a beginning. For the 2026 cohort, interviews and talent trials were conducted at over 58 locations across Kenya.
The KCB Foundation is today at the Moi Avenue Primary School in Nairobi County, as well as other locations in all 47 counties. And the objective is to look and interview students who finished their grade 9 exams and are transitioning into grade 10.
The KCB Bank sets aside 1.5% of its BBT towards supporting the activities that are delivered through the KCB Foundation. Through the foundation, as a key thematic pillar for our activities, we are able to give scholarships to the most brightest and most needy students from high school through to tertiary.
It's important to partner with KCB Foundation because we get the help of the branch managers in the mentorship of our students.
I look at KCB Foundation as a godsend institution. And by partnering with KCB, makes us get more partners out there. Because they are saying, if a Kenyan brand can believe in you, that means you're doing something good.
Since 2007, the KCB Scholars Program has supported over 5,800 students through secondary school, with an additional 1,000 set for 2026. This holistic support extends from senior school up to university level. The scholarship covers tuition, uniforms, books, mentorship, termly transport, shopping, pocket money, and psychosocial care. After interviews, selection panels moved into communities for home verification visits to understand the real circumstances behind the applications. In Cheplosgei village, Uasin Gishu County, we meet 15-year-old Valentine Kimboi. At 9 years old, Valentine was struck by a debilitating illness that left her paralyzed from the waist down. With 3 siblings and parents surviving on a meager income, school became a luxury. Some weeks, she could only attend class once.
Ilikuwa 2019 usiku saa 9, tumbo ikaniuma sana, alafu tukiamka asubuhi mguu ilikuwa imeparalyze. Siku Sikuwa nasikia kitu. Nikaenda MTRH, tukaambiwa ni nerves ilifail.
Defying the limits set before her, Valentine scored 52 out of 72 points in her KCSEA exams. Her dream is to become a doctor. With no means to continue her education, she turned to the KCB Scholars Program.
Sasa maisha yake ilibadilika hivyo, tukakuwa tunatumia pampers. Shule pia akatumia pikipiki ambayo alikuwa anaenda mara 2 kwa wiki. Juu ya kukosa hiyo pesa ama pampers labda hatukuwa nayo siku hiyo.
During home verification visits in Uasin Gishu County, what the panel found could not be captured on paper alone. Valentine's application was recommended for sponsorship. In Namunyiri Village, Kakamega County, the KCB Scholars Selection Panel visits 15-year-old Bramwell Chasala. Bramwell is a gifted sprinter, specializing in the 100 and 200 meters. He has represented Kenya at the East Africa Games, bringing home medals despite limited resources.
Iwapo Bramwell atakuwa amechukuliwa na aende kusoma, kile atabadilisha kwetu, maybe atatujengea nyumba.
Na kwa familia tuko juu kidogo, ni kung'ang'ana tu ndio tupate
Mic check.
chakula.
Through the KCB Scholars Program, Bramwell hopes to pursue his education while also chasing his dream of becoming an Olympic champion like his idol, Usain Bolt. In the informal settlement of Nyalenda, Kisumu County, lives Grace Akinyi. Raised by her disabled grandmother, after losing her mother, Grace has grown up fast in a world shaped by hardship.
Changamoto nimesapitia mingi. Anaenda shule bila chakula. Hata wakati wa kufanya mitihani, head teacher ndiye alinisaidia. Mimi napitia ngumu sana.
During the home verification visit with the KCB Scholars Selection Panel, any doubt Grace had earned her place was removed. She scored 61 out of 72 points in her KCSEA exams from Kibuye Primary School and dreams of becoming a doctor.
My grandmother was a businesswoman and she got an accident, so from that she could not do any business.
In Nairobi's Eastlands area of Kayole, Stephen Buya shares a single room with his mother and 2 younger siblings.
Kutoka grade 2 ilikuwa hard kulipa school fees. Mimi in future niko nataka kukua addition engineering. Juu mimi niko nimesipaiwa na anko yangu.
Deep in Kajiado County in Osilalei, Jane Namila, the eldest daughter in a family of 8, reflects on the hardship she endured while growing up. She had to balance her schoolwork with supporting her mother's beadwork to help provide for the family, as her father, who is blind, was unable to work.
Wakati nilikuwa nasoma, kuna wakati mwingi nilikuwa nakaa nyumbani kwa ajili ya school fees. Pia uniform, ilikuwa tatizo lingine.
Igira imengololo sababu lenga Mungu. Ewa bamba wale nyamudugu. Aramuda doroku na gerolling. Sababu ogimbe isoma danalo kibarua.
Through it all, Jane learned resilience early, carrying responsibilities far beyond her years, and hopes to be a doctor in future. These select scholars represent 1,000 scholars selected into the 2026 KCB Scholars Cohort from every corner of Kenya. Their journeys are different, but their hope is shared.
Ningeweza kushukuru tu KCB kwa kunipatia scholarship. Itaweza kunisaidia kwa maisha yangu na pia kusaidia wazazi wangu.
Nashukuru kwanza, alafu nitasoma kwa bidii nimempea scholarship.
I'd like to appreciate the KCB scholar. They have helped my grandmother and my family.
The 2026 KCB Scholars Cohort was commissioned across various KCB branches nationwide in ceremonies attended with partners and KCB group leadership.
Today is a day of hope and a day of possibility.
It's a new beginning for most of us. It's a nice journey to start, and we hope that all of us will walk this journey together.
I wish to commend KCB for its steadfast commitment to education. For your support is a strong vote for confidence in both the potential of our youth and the future of our county. This initiative serves as a bridge to opportunity and launchpad for future leadership.
Good evening, everybody.
This year, we celebrate.
Let's please settle down. Let's settle down. We settle down so that we can start our event. Sound, are we ready? Production team, we're ready to start? Very good. Distinguished members of KCB Group Board and subsidiary boards, led by our chairman, Dr. Joseph Kenywa, members of the Group Leadership Committee, led by our Group CEO, Paul Russo, KCB shareholders present, our customers, staff, media partners, and all our invited guests. Welcome and thank you for joining us, whether you're joining us virtually or physically here. Karibuni sana. My name is Peter Moora, and I will be your MC for this evening or this afternoon as we release our full year 2025 results. But before we proceed, I'll ask that we stand for the national anthem and the East African anthem. Then we'll say a prayer.
O God of all creation, blessed is the foundation. Justice the ocean and defender. May we bend in unity, peace and liberty. Plenty be found within the border. Uzalendo pia mshikamano viwe msingi wa umoja wetu, na tulinde uhuru na amani, mila zetu na desturi zetu.
As you stand, allow me to read a prayer here. Almighty God, we thank you for the privilege that you have given us to gather together in this place as we share our performance for the last year. Guide us, lead us, and give us your wisdom, knowledge, and understanding as we share our story. We thank you for everything that you have done. In Jesus' name we pray, amen. May you have your seat. So allow me to invite security team from the hotel to give us some safety and security updates. Some? Okay, fine. I think we can proceed without that, but we know where the restrooms are, and the exit door is that one. At least I've gone through around this place, and I know where we can use to get out of this place. Today's briefing, we are going to have a highlight of our performance, financial performance, our strategic progress, and the outlook for the year ahead. We all appreciate your presence here, all the staff who are joining us online, and those who are present here. And before we begin, allow me to give some housekeeping update. We'll have a speech from our group chairman, and then the group CEO will make some remarks. And then the group finance director will come and make his presentation on the financial results. Then we'll have a Q&A later, and we'll get to discuss more about the results. Let's ensure our mobile phones are off. We are producing for the online audience, so let's make sure that we have our phones well managed. Ladies and gentlemen, let me invite our group chairman to come and make his remarks.
put by Maura, by our CEO, and the guy also in charge of overall finances. So group board members present, group CEO, Paul Luso, senior management team, staff, stockbrokers, investors, analysts, and fund managers, our media partners, ladies and gentlemen, good afternoon. Good afternoon again. I think you have come from lunch and I believe you have the energy. On behalf of the group board of directors, I take this opportunity to welcome you to this ceremony as we release the KCB Group 2025 full year financial results. Thank you for finding time to join us today, physically or virtually, as we reflect on our performance in the past financial year. Before I proceed, you allow me to take these glasses out. Before I proceed, I wish to thank all our stakeholders, shareholders, customers, staff, regulators, and other partners for their unwavering support and trust in our business over the years. KCB for sure will not be the regional powerhouse brand that is today if it was not indeed for the support we have received from all those regulators. You are those stakeholders. You are the bedrock of our success, and for that reason, we salute you. I also acknowledge the directors of the KCB Group, board, and subsidiaries for their dedication, continued support, and commitment to providing quality oversight, governance, and effective leadership to our business. May I request those who are present today to rise so that we can appreciate them. Please, the directors, board directors who are here, Amina. Thank you. We really appreciate you. We know it is you who are the piloting together with the management team and what we'll be talking about in terms of how things have shaped in the 2025. It is because of you guys. Katini. In the same breath, allow me to thank the group leadership team led by the group CEO, Mr. Paul Russo, for diligently steering the ship and ensuring that KCB continues to deliver value to its stakeholders. Ladies and gentlemen, I'm pleased to address you today as we reflect on a year of resilience, strategic growth, and continued commitment to sustainability and economic development across the region. I'll try to give the environment within which we have been operating, which I think is important to appreciate the journey we have walked. So ladies and gentlemen, before we get to the results, allow me to give an update on key performance parameters. Firstly, the operating environment. The year 2025 was characterized by steady resilience with global economic growth being roughly between 2.7% and 3.3%. This growth was largely driven by technology, trade, and energy. Going forward, inflation is expected to ease towards 3.4% in 2026. But when we look at the growth of the economy, it is projected to remain still subdued at around 2.6%. The geopolitical landscape remains fluid, characterized by systemic geopolitical shifts, especially emanating from the ongoing US-Israel-Iran conflict, a development that we will keep monitoring closely so that we are able to ensure in time we are able to put in place what can help to ensure our shape does not deviate from the path that we have set for ourselves. Regionally, East Africa remained the fastest growing sub-region in Africa, driven by expanding trade, demographic growth, digital innovation, and regional integration. Most economies recorded growth rates significantly above what on average the global growth did take place. The macroeconomic outlook for 2026 remains positive, with East Africa expected to maintain strong growth relative to the rest of Africa and the global economy. Sectors such as oil and gas, infrastructure, trade, and easing of monetary policies will support this momentum. For KCB Group, we maintained a healthy performance in 2025, marked by improved profitability, a resilient balance sheet, and stable capital levels. The risk-calibrated business growth was achieved through the focus on ecosystems and high-yield operations by deepening market coverage while ensuring discipline in credit and profitability across the business segments. Ladies and gentlemen, let me now talk to KCB Group performance. KCB Group delivered a strong and resilient financial performance in 2025. Our regional diversification strategy continued to be the anchor to our performance. Notably, the subsidiaries recorded impressive performance, delivering 30.7% of the overall profit before tax and 30.2% of the total group assets. So you can see extending our foothold outside Nairobi, outside Kenya, has been beneficial. There are people who would have doubted, but one can be able to see from these results. And while we talk about that in that kind of a context, we also have to appreciate, as I mentioned earlier, it is the team that is piloting that has made us ensure with that foothold, we're able to achieve what we had expected. We continue to pursue a balanced strategy focused on investing where returns are attractive, protecting capital, and deepening our service model for customers. This set of results speaks to the resilience of our franchise, the trust of our customers, the discipline of our teams, and the soundness of the decisions we have made, and the disciplined execution of risk and capital management policies. Let me thirdly touch on an important aspect which does explain why we have been able to do that we see is an encouraging performance. I wish now to reiterate that KCB Group governance structures are solid. We have instituted governance frameworks that are not only aligned with regulatory requirements, but also benchmarked against the global best practices. These structures ensure a clear delineation of roles and responsibilities, fostering a culture of integrity, innovation, and operational excellence. Also, in terms of ensuring from a sustainability point of view, the fourth issue that is important to mention is our efforts in embedding responsibility and sustainability in all aspects of business and operations. These have considerably yielded positive results for the bank. The bank continued to make progress on environmental, social, and governance factors in 2025, with expansion and deepening of sustainability goals and actions, building competencies to understand risks emerging from climate change, and supporting the opportunities in sustainability journeys of our borrowers is an ongoing area of focus. To measure progress, we shall work on measuring and managing the impact of the bank's business and operations on the environment and society to provide visibility on areas that need more attention. Across the region, we continue to support enterprises, facilitating trade, financing infrastructure, and enabling millions of small and medium-sized businesses to grow. Ladies and gentlemen, KCB cares about the well-being of our people. We don't just focus on the bottom line in terms of the profit we can make, but we know we are operating with communities, and we need to be seen to appreciate that if their well-being is also being undermined, we would be also held responsible. So through the work of our philanthropic arm, KCB Foundation, our focus is on investment in youth enterprise, education, financial inclusion, and climate resilience initiatives that uplift communities and expand economic opportunities. So, ladies and gentlemen, looking ahead forward into the year 2026, we remain very optimistic. East Africa continues to present significant opportunities, which KCB Group is well positioned to harness. The board is dedicated to maintaining excellence in corporate governance, as this is the surest way to drive sustainable business growth. I take this opportunity to appreciate our customers for their continued trust, our employees for their dedication, our regulators for their continued support, and more importantly, our shareholders for their faith in the KCB Group brand. Ladies and gentlemen, allow me now to invite Paul to present an overview of the performance of our organization. We'll take any questions you may have thereafter. Asanteni sana. God bless you. God bless KCB.
If it's not broken, we won't stop moving. We're going to continue moving, even if the wheel has broken off and it's sitting like this. We're just going to try and get it out the stage.
Thank you, media team. Revision na KCB. You know, my role is always very simple in this event. I have only two roles. The first one is to second the message from the chairman. So I second, chairman, your message. Yeah. And the second one is to curtain raise for Lawrence. So Lawrence, allow me to curtain raise. I think I'll just talk about a few elements. You know, we've had a changing operating environment of, in my view, pockets for growth. And I just want to highlight 5 of them. We've had stable currencies in most of our markets. We've noted Kenya, Uganda, and DRC. Local currencies appreciated against USD year on year. We noted Uganda and DRC local currencies did appreciate against the Kenya shillings, while South Sudan and Rwanda currencies depreciated. What you'll notice then, obviously, when Lawrence speaks, is because we report in Kenya shillings, then we will have a translation effect. But that has been on the positive in many instances. As the chairman said earlier on, East Africa region, has seen positive growth, GDP of around 5.8%. If I'm not wrong, against Sub-Saharan Africa of around 4.1 to 4.8 in some instances, depending on what document you read. In many of the markets, we've seen private sector credit, picking up, particularly in Kenya, where it was negative 2%, just as we got into last year. And I think in the last report, we saw that it's up to 6%. And we really want to get that to double digit. And as chairman of Kenya Bank Association, we are working together to make sure that we grow private sector lending. I think we can see a lot of interest, particularly in the Kenyan banking sector. We've seen declaration on acquisitions. We've seen interest, within the market for expansion. And that just tells you that we are cognizant that competition will intensify. Moderate inflation, however, as Chairman said, none of us anticipated the USA, Israel, Iran, maybe is it tiff or war, depends on what you want to call it. And while we think if it is short term, if it ends sooner, we don't have much worry. But if that runs for long, then we know what that means. So that's a significant risk. We've also seen the extended closure of Eastern DRC on banking setup. I think now we're getting into close to 14 to 16 months of that, if not more. And businesses like TMB and in DRC will definitely come under pressure on that. For many of you, you might know, however, I'll say South Sudan and Burundi have been on hyperinflation, and we are reporting them as such. So looks moderate, but I think those two markets, have gone into hyperinflation. But I tell you for sure, if the Iran manenos go for long, we will come under pressure ourselves. On the other side, interest rates have been trending downwards. I think it's been good sign, good monetary policy positions taken by the central banks, but we'll come under pressure again because of what we are seeing, particularly if that is drawn longer. Geopolitical, I think Chairman did mention this. Like I said, the Eastern DRC, we've had around 14 branches, 15 branches, around about 150 staff for that period closed. Those of you who know that market, as long as Goma Airport remains closed, there's very little that you can do in that setup. We are positive. We've seen resilience from the other parts of the country. We've seen our teams do a lot more. But these geopolitics elements is something we continue to monitor. In terms of business update, seeing that we are well established across the region, we are growing intentionally to meet our emerging needs. Customer numbers ticking up. I think the last time I stood here, I think we were at around 31, 32 million customers, up to 34 million customers, meaning we're growing both from the conventional banking and digital customers. You can see the split of that, really upping agency banking and merchants, particularly in our non-Kenya banking businesses. And it's important to note, even at this stage, and I know Lawrence will speak about it, these numbers are excluding NBK. So if you compare last year when I was speaking about 31, 32, it had National Bank of Kenya numbers. So very, very good growth. I'm always proud of the number of staff that we have, because behind those staff numbers are families that we do take care of. I think I know people will ask me about Ethiopia. I will tackle it somewhere here. A well-diversified business model, which is sustaining our resilience. And I think the 4 points I will touch on here. You'll see Ethiopia rep office with 2 asterisks. We continue to make an assessment of that market. We are doing deep evaluation of that market, especially with the recent easing of forex controls and liberalization of that front. I think I'll talk in detail about Riverbank and Pesapal. It must be in the next slide. And how we are going to optimize those entities. So that is the structure of KCB. As you know, we concluded the acquisition of 75% of Riverbank as at 31st December 2025. And they will be consolidated with the numbers Lawrence is going to present. One point I want to raise Remember, I said I was seconding chairman, and people thought I was just joking. Chairman said, if you recall, the strength of KCB is governance. So this slide just demonstrates that level of governance. But two, changes we've made getting into this year. We did reorganize our board committees to make progress and to ensure that we are well organized to support the big business that we've become. Those who will remember that audit and risk was one committee. It was Group Audit and Risk Committee. That has now been split to be Group Audit Committee and Group Risk and Compliance Committee. That is just to make sure that we have those two committees with sufficient mandate to continue to enable us. What we've also done is extended the terms of reference for some of the committees, for strategy to oversee oversight, to have oversight mandate, the nominations committee, which largely deals with governance and the recruitment of senior executives as well as board members, that now constituted as a full committee. The rest is the executive committee. One key change around the leadership team is, if you look at my right, possibly your left, is having Yannick Ngandu, who is our new managing director for Trust Merchant Bank, as a member of the group executive committee. So Yannick has served Trust Merchant Bank for a number of years and has stepped in as the managing director from 7th December 2025. The rest of the people, beautiful and handsome. They are known. None of them has left. So thank you guys for staying on. Let me take pride that you've stayed on. And hopefully the numbers then will show the contribution from that team. I've seen some colleagues from subsidiaries. Thank you for attending. I've seen Anastasia Kimtai, who runs KCB Kenya. Cosmas Kimario, I know he's in Zanzibar, but working, not on holiday. He's working. Yannick should be following online, if I'm not wrong, going live on T24 on Tuesday. I've seen Patience somewhere. Patience. Thank you, Patience, for joining us, our managing director for BPR Bank Rwanda. The one and only Edgar Biama. I saw you somewhere. Oh, you got a tie. Good. Thank you, Edgar, for creating time to join us. The hyperinflation guys. I saw Robert Jaldeza from KCB South Sudan. Thank you, Robert. Masika Mukule, another. You see, they're sitting together. Yeah. When I met them earlier on, they told me they are discussing. They were also sitting together. They are discussing how to get out of that environment. So thank you, gentlemen. We've got Agri Mulumbi, Managing Director for KCB Bank Assurance. Is Maurice around or is chasing the transaction? Thank you, Maurice. Some of you might have seen the acquisition of NMG by Tarifa Limited. Thank you, Maurice, for leading that transaction for the buy. I appreciate it. And last but not least, Mendi Njonjo, the softer side of the organization. All these guys, I asked them about numbers, but I asked Mendi about the soul of the organization. So thank you. Let's move into this curtain raising for you, Lawrence. Is you must pay for it. In terms of our 2024-2026 strategy, while we're coming to an end on 2024-2026 strategy, my mention here, Chairman, it is still relevant. It has remained relevant. It's seen us through. We'll move into developing 2027 to 2029 strategy. By the end of the year, we should formalize that. But we fully believe that this actually does take us forward. Significant initiatives in delivering some of the key initiatives. I want to highlight around 5 quickly. The sale of NBK, we concluded the sale of NBK 30th May 2025. I know investors were nervous that that was dragging too long. We successfully concluded that. And as I said earlier on, the numbers that Lawrence is going to present do not include National Bank. If you remember the last time when we presented the numbers, they were in assets for sale, available for sale. Is that the category, Lawrence? So that is gone now and will not be reflecting in our numbers. We've optimized our channels, and I think I want to mention the new mobile banking app. If you haven't downloaded that app, please do. 3 key things I want to mention about that mobile banking app. One, you can self-onboard. You can get onto, whether you have Maisha card or PIN or not, you can self-onboard and you can have a wallet and start banking. I think that for a long time for KCB has been something we try to resolve. So I thank the team, Angela, and everybody else that has been involved in. So today, we are not banking wazee. If you are a youth, please get in, download, get your wallet, start transacting. The second one, by the way, Victor, why didn't I mention you? You know, Victor, you have forgotten KCB Asset Management, the MD for KCB Asset Management. You want to invest in money market fund? Go to that app. Download, register, money market fund. You don't have to call that gentleman and his team. And finally, in my view, for the app, end-to-end, mambo ya kutuma pesa to wrong number, to wrong account number, done. Easy to use. And we will then be loading a few more elements onto that app. So Angela, you will pay me some part of your bonus. Continued deepening of digital channels, 99% of transactions by number done outside of the branches. You know, sometimes people still ask me, Paul, but then why are you opening branches? They are relationship management centers. They are our human interface points. And by the through this, in a number of locations, to date, there are constituencies in Kenya that don't have branches, banks. And I can name a few, including Laisamis, where I come from. They don't have a bank. So we still have we have a long way to go. So I think in Nairobi, it looks like it's covered, some instances, but we'll continue to make sure that financial inclusion and deepening, we attack it from all fronts. Talk about mobile loan disbursed. We grew mobile loans by 30%. We disbursed 544 billion, equivalent to 1.1 billion per day. That's the power of making that investment. And that's why we upgraded our system to make sure that we can be able to meet these numbers. As I said, a bit of expansion of branch network selective, customer CVPs. I think I'll mention just a few. We talk about youth, women, schools, and affordable housing. But I wanted to talk about our partnership with UNHCR. If you talk about financial inclusion, you must also work with the foundation and the bank to make sure that those who have been displaced are well represented in the financial system. The unified, I think there is another element that I need to tackle in Chairman, just up front. So I think we've appeared in the media in the last few days about instant fines, particularly for Kenya. When we acquired National Bank in 2019, this PPP was at an advanced stage. When we sold National Bank, it was almost on the tail end. And Lawrence, I'll say, because there was an element of some stock of cards for DL, for driving license. Maybe my brothers in Access saw that as an exposure. So they said, hive it out. We hived it out. So it's part of the hived out names. So it's gone live when it is in our shop. Tuko pamoja. And I think road safety, road discipline, whether it's KCB or somebody else, it has to happen. So I just said 2019. Remember, they were on it before that. But as KCB group, we've been on this thing for 2019. And I've seen people sending me messages today, oh, I overlapped, I was fined 10,000. It's a consortium, I have no power. Even for me, I will receive the same notice. So let's just, I thought I tackled that because I know in the end, people will want to raise that. Unified multi-currency, I think at the moment, 18 currencies in one card. I am a witness for my daughter in university. I give it to that, I'm done. So well done to the team that has been involved in this. We signed up PAPs. We continue to work with other countries to make sure that PAPs work. In terms of technology, we implemented Terminal's advanced collections, and Bernard, I expect that to do two things. One, help us in collections, but most importantly, in asset management, but also improve on our capability to just report on our assets. I'll talk later about robotics and what we are doing with Riverbank. And there it is. We completed the acquisition of Riverbank. It's now a subsidiary of KCB Group. I can't see Nick here. He doesn't like when I say he reports to me. But that's just the truth. So Riverbank has presence in Kenya, Uganda, and Rwanda. We've already seen significant value, particularly in Tanzania, in working with Riverbank. And we are obviously seeing benefit, particularly in our shared services in automation. When I look at Pesapal, we are waiting regulator approval. But remember, Pesapal, just like Riverbank, have been our partners for many years, for over 10 years. So we continue to do a lot with Riverbank, particularly Riverbank and Pesapal. Getting into markets without brick and mortar, because they're in Uganda, Tanzania, Rwanda, and Zambia, but also trying to run ecosystems with them. So I see Riverbank and Pesapal and the work that we are doing in the DFS enabling us to accelerate the next growth phase. For a long time, because of who we are at 130 years, Riverbank and Pesapal are going to be catalysts to accelerate. And I'm confident with what we've seen in the last 3 or so months. Bringing it almost to a close, I am passionate about long-term value for shared prosperity, greening the loans, screening loans for Kenya, Rwanda, and Tanzania. I don't believe in planting trees. I believe in growing trees. Mandy. And remember, I gave you a target of the exact number of population for each country. So this number looks like too small. Thank you, Mandy. We've supported creation of 265,000 jobs. We're educating 4,261 students, impacting people for better. Finally, ranked third overall among Africa top banks in the Bankers Continental rankings. Those accolades are too big, but I want to mention BPR being the bank of the year in Rwanda by the Banker magazine. I think Kenya, you've received too many, Anastasia. But congratulations. And obviously yours truly receiving some awards. But we want to continue to impact our customers to ensure that that reward gets back to shareholders. I know I've been on social media the last 2 days, and people are asking me directly, Paul, are you keeping the promise on dividends? Are you keeping the promise? That is why I was curtain raising for this. So over to Lawrence. I thank you.
Try and balance this. Good afternoon, everybody. Can you hear me well? Right. Now that my boss has set me up, I have no choice but to deliver this part that was cut and raised by him. So let's get onto it. Starting with the balance sheet as usual. So we had an uplift of 9% of our balance sheet to that closed at about 2.15 trillion. That's despite letting go of NBK. So NBK was there in the entire 2024, but only, actually from a balance sheet point of view, they're not, we did not consolidate anything, which is the right accounting. So if I do a like-for-like comparison, the balance sheet actually grew by 18%. That's quite a remarkable growth. Looking at the funding side, we had a very good growth. For a very long time, our deposits have been single-digit growth. Customer deposits in 2025 grew by 16%, 15% to close at 1.6 trillion. And that's equivalent to about 210 billion shillings. We also did go out to the market to borrow some foreign currency denominated loans. One, to just optimize our balance sheet, our capital structures in Kenya and in Uganda. And two, to get some dollar liquidity to be able to on-lend, and that was both in KCB Kenya and in BPR. That was about 30% year-on-year growth, about 20 billion. How did we utilize those funds? When you look at the utilization side, you see our loans grew by 16% to close at about 1.2 trillion. That's equivalent to about 176 odd billion growth. We increased our investment in government paper by about 45 billion, 11% growth. So overall, when you look at our interest earning assets, we did have a growth of about 14%, 224 billion year on year in terms of growth. And you'll see how that then translates into shareholder value, as Paul said. Looking at the distribution from a subsidiary by subsidiary point, all our subsidiaries did demonstrate balance sheet growth, actually double-digit balance sheet growth. You can see KCB Kenya 17%, and I'll come back to TMB, which was 10%. 38% down by BPR, good performance. Last time they told me that I did not recognize them well enough, so here you are, 38% BPR, well done. Uganda 37, Edgar, well done. I think your board should be commended. I just happen to sit in that board. And you can see the two hyperinflation countries also, good performance. Now, I said I'll come back to TMB, 10%. As Paul mentioned earlier on, we've had our branches on the eastern side closed for the better part of, actually, I think the entire of 2025. And then also we've had a currency issue. We've seen the CDF, which is a local currency in DRC, appreciate. And we have a three-pronged translation with DRC, because a lot of their balance sheets and financial sit in dollars. So when you translate CDF to dollar to Kenya shilling, there's a lot that is being lost there. And hence why it's looking like a subdued growth. It's a growth nonetheless, but it does look like it's a subdued growth. Just unpacking some of the key lines of the balance sheet a bit further. You can see from a deposit point of view, I did talk about the 1.6 trillion. The bulk of that growth on deposit came out of demand, which is the big part of the mix of our deposits, 136 billion. The rest coming out of call, savings and term. When you look at the mix of the deposits, the demand still continues to be about 61%, but we noticed an interplay between term and call, between the 2 years. So a lot of our customers are letting go of term and increasing call, and I think it's because they want, to be able to get their money as fast as they want. They don't want to keep it in demand where it doesn't earn much of an interest, but they want to earn an interest, but can be able to make a decision quickly when they want to spend, to utilize their funds. From a segment point, that doesn't change much. Retail brings 47% of the deposits and corporate 53%. And the currency one is the one that we've seen a bit of improvement. Let me not call it improvement, but we've seen FCY getting bigger in our balance sheet. FCY is foreign currency denominated funds compared to the local currency denominated funds. Looking at loans, I did talk about the growth of about 175 billion. The bulk of that came out of KCB Bank Kenya, about 131. And that 131 was driven by corporate. Corporate grew about 67 billion, followed by retail about 50 billion, and the balance went to our mortgage function. In BPR, came second, about 14 billion in growth, largely coming out of the personal lending book, building and construction. In Tanzania, we saw a growth of about 10. Actually, both Tanzania and Uganda grew about 10 billion, coming out of manufacturing, energy, transport, and communication. When you look at the mix of the loan, corporate has now gone slightly higher compared to in the 2 years. Corporate now represents about 53% of the total loans, and that's not by mistake. The focus we have given the corporate side of the business in the last, I would say, 15 to 18 months has been immense, because we were starting to lose our market share in the corporate side, and you can see the fruits of that focus. And then from a currency, it's a 75-25 mix. Looking at how that loan book then is split from a sectorial basis, and also now starting to move towards the conversation of NPL. Personal and household continues to be our single largest sector within the bank. About 30% of our book sits in there. That's where we have our checkoffs, we have our scheme loans with various universities and institutions. Followed, not too closely, but followed by both real estate and manufacturing, which share the second position, and then trade and building and construction come fourth and fifth. But I think the good news, really good news on this slide is looking at the NPL sector ratio and the green arrows. You can see all the sectors managed to reduce their NPL, with the exception of tourism, restaurants and hotels. And that's because of two downgrades, one here in Kenya and one in Roba's jurisdiction in South Sudan. And then when you look at now the contribution of those sectors from an NPL point of view, you see that manufacturing still tops. And we've talked about manufacturing for a very long time. Never has quite fully recovered from since COVID days. There's policy work that is being done to support it. But there's still quite a lot of work to be done there. So from an NPL point of view, we did see upgrades and recoveries of about 53 billion, but equally we also saw, not equally, but we did see some downgrades of about 39. So those of you who are quick with the mathematics, you'll see 53 minus 39 will give you what the trending of the NPL stock, which is on this slide, is. So NPL stock went down by about 14 billion from 225, 226 to about 211. But you'll remember quarter one 2025 was actually the peak of our NPL, 233. That's when we peaked. So when you look at the movement, the work that the team has done, in quarter two, quarter three, and quarter four, to get us down to 212. That's a 21 billion movement. NPL ratio also came down year on year, closing at 16.9. That's the lowest it has been since we announced the 2021 results. So from 2021, we've been trending up, and now we've finally started coming down, and that's the lowest. I think that deserves a clap. Yeah, thank you, Bernard and Tim, for the hard work. Coming to the coverage side, you can see both IFRS and regulatory coverage ratios have gone up by actually about 1,000 basis points, 40 to 50 and 49 to 59, so 1,000 basis points. So what we made, the decision we made was instead, with NPL coming down, stock coming down, the expectation is you will be making releases on ECL, on provisions, and you have the choice to either utilize that and show a good PBT, or increase your coverage ratio. We took the decision to actually utilize those provisions to get our coverage ratio up. And when I come to the slide that shows cost of risk, you'll see that's one, the slide that I usually call the report form. That is one of the items that is in red because our cost of risk is actually higher than the previous year because of that decision we made, and we believe it was the right decision. Continuing with the NPL conversation, so just looking by subsidiaries, you can see KCB Bank Kenya NPL coming down to 19.9, and that's despite of getting in the hiving loans from NBK, some of which were already on NPL or went bad once they were hived in. So good work that has been done to make sure that year on year there's a reduction. TMB flat, but we know that the impact of the Eastern DRC conflict, there was a lot of heavy lifting to get some of the big customers that were almost actually some of them were almost being taken over by, if I use that word, to be taken over by the rebels, and a lot of work had really stopped. So cash flows had become an issue. So to get to close that at same level, that was good work by the DRC team. KCB South Sudan, I mentioned one of the big downgrades was hospitality, and that's why you see that going up. When you look at the sectorial breakdown of that NPL, just look at Q1 25 and full year 2025, you'll see all the sectors with the exception of others has shown a decrease in NPL stock. And what is sitting in others is really what I talked to earlier, the tourism, restaurants, and hotels. Those two downgrades have contributed that increase in others. So today I'm actually happy to present these 3 slides. In fact, I was telling David you should have added more because we have a good story to tell on that. Moving into the numbers then, now the actual income statement. Yeah. Total income grew by, I think, 4% to close at 214 billion. Again, I will keep mentioning the fact that if you take out the divestiture of NBK, we did actually have a fairly good growth of 8.4%. Interest income, a decline of 3%, partly contributed by divestiture of NBK, but also greatly impacted by the reduction of interest rates. You all know 2025 was a year when rates were going down. Every MPC, there was a rate cut, and we had to follow suit on that reduction. So asset yields, both at government security level and at loans, especially for KCB Bank Kenya, were on the downward trend. Like for like, that interest income actually did grow by 3% if I take out the NBK impact. I'll also, if you look at the other income, you can see 54% year-on-year growth. What we have added there is the gain we made out of the disposal of NBK. So there's about three odd billion that was a gain on disposal that is been accounted in that other income. Costs is a good story. Year-on-year reduction of about 2.7. There's an element of divestiture of NBK, but also there's an element of leverage in our group capabilities to drive efficiency. We are getting a lot more efficient. So even with taking out NBK, it was a single-digit inflation, about 7% year-on-year increase on costs. So what the work that we are doing in terms of pushing that agenda from a strategy point of view is paying off. Cost-to-income ratio down from 45 to 42, whilst the jaws, you can see that the jaws are still positive. They've reduced from 12.2 to 7, but it still shows that we're actually pushing our revenue drivers to fire more than the cost side of the business, hence the positive jaws. Coming to the slide that I know you've been waiting for. PAT, profit after tax, closed at 68.4 billion. That's an 11% year-on-year growth. When we stood in, I can't remember where we announced results last year, and announced that our PAT was 62 billion. Including our external auditors, they actually told us, you have your work cut out for you in 2025. To repeat that performance is not going to be easy. So I'm happy that the team pulled together and managed to actually grow the PAT. The bulk of that was driven by net interest income. We managed our margins very, very well. So we had a volume growth. I did show the 16%, actually 14% growth on interest-bearing assets, but also we were quite effective in managing our net interest margins, and that delivered about 11 billion. I talked about the cost management, 2.5. We lagged behind on NFI, non-funded income. That was largely driven by performance on FX. Across Kenya, DRC, and some of the other subsidiaries. Fees and commissions as well, Kenya and primarily TMB also lagged behind. I talked to the provisions. We actually had a 2.5 billion additional provision year on year. And that's, again, a decision we made to ensure that we increased our coverage ratio. The distribution of that across our subsidiaries, they contribute 30% of that 68.4 billion. You can see the growth across most of the markets. Rob has had almost 100% increase, but that's because he had been hit by hyperinflation in 2024. Whereas when you look at Burundi, it's a decline because Masika was hit by hyperinflation in the second half of 2025. So hopefully when you compare this with 2026, it will be showing a positive. I did talk about TMB performance from a balance sheet point of view. You can see a decline from a profitability point of view. And that's largely because of the reasons I gave on translation, the strengthening of their currency, and also the Eastern DRC closure of our branches. So, promise to shareholders. We are keeping the promise. We had an interim dividend of 4 shillings, which we paid out, I think, in November, I think. And we are proposing a final dividend of another 3 shillings to make a total of 7 shillings paid out of 2025. That's a 133% increase compared to 2024. It's a 33% payout, which is almost double what we paid out in 2024. Total dividend paid is 22.5 billion. That signaling the market has had a massive impact on the share. So when you look at the market capitalization compared to 2024, a 58% growth on market cap. We are at the end of the year, we were at 211. As of today, we are even higher than 211 billion. Total shareholder return for 2025 is 75%. So unless you sell some products that come from Colombia, I don't think you can get that return very easily. I hope I don't go to Colombia and they kidnap me for that. Looking at our capital, again, the good news is that we are not mortgaging the organization. We are distributing dividends to the shareholders, but we are also making sure that our capital position is compliant. So looking at the buffers, both at core capital and at total capital, you can see all our subsidiaries have ample buffers. For Uganda, I mentioned earlier, we did get tier 2 facilities that have increased their total capital buffer. And for Tanzania, we will capitalize Tanzania this year. It was part of the promise that we made, because we believe there's a lot of opportunities that we are leaving on the table purely because of the capital position for Tanzania. Looking at return on equity again, 22.5 at group level. All the subsidiaries sitting in very good double-digit numbers, with the exception of Burundi, and I did talk about the hyperinflation impact for the second half of 2025 that have dropped that number. Actually, at half year, Burundi's return on equity was sitting at 20% thereabouts, but hyperinflation has come and wiped part of it out. My final slide is a scorecard, the report form that I talked to. I will focus a lot on the reds. You can see the greens. We've hit on the outlook we promised to the market. We have come and delivered that. Cost of risk, we had given an outlook of between 2.2 and 2.4. We intentionally went to 2.8 because we wanted to build our coverage ratio. It's feedback that we've been given over the years by investors, and that is action, of what we've done. The NFI ratio is the other red. We had given a range of 33 to 34. We ended up at about 30.7. I talked to the two items that were driving that. One is FX, and the second one is fees and commission on the two biggest subsidiaries that we manage. Those are areas, obviously, that we'll focus on. Diversifying our revenue sources is an important strategic objective for us. We would want to get that number, of course, to the levels that we had given as outlook. So with that, I shall stop there and we shall be able to take any questions. Thank you very much.
Thank you. Thank you very much, Lawrence. Thank you, Chairman. Thank you, Group CEO. We would want to transition into the Q&A. And I'm sure all of us now have a picture of how our performance is, the milestones, and where we are going as a business. So I'll ask the team to set up as I request the Chairman, the CEO, and the Group FD to come on stage so that you can take the questions.
When I had my accident, I went to India to get my rehabilitation done. 6 months, it was always playing in my head. Can I do to get back into motorsports?
Very good. We have our panelists here. So I'll ask anybody who could be having a question from the floor, introduce yourself, your organization, then we can raise the question. Feel free to raise any questions around those numbers. Anybody? And I know there are questions that are online. So I wanted to start with the people who are in the room. Very good. I think for my panelists, we'll go with the first questions that I'm picking from online. Could you comment on the impact of geopolitics in East Africa and the impact on the business going forward? So I think that question, I know you have touched it a bit. Maybe Chairman Paul, you can take that. Second question, could you please speak into the 3 key focus areas for the business in 2026? The third one, could you speak to the specific performance of the regional businesses? And I think that you've spoken a bit about that, but for purposes of that question, you can go deeper into it. I think we can first take those as I collect the rest of the questions.
Okay, thank you, Peter. I think Chairman and I did touch briefly around geopolitics. I think at the moment, the specific impact that we have is obviously Eastern DRC. I've said this a number of times, and Chairman, you'll bear me witness on this one. We projected a 10% impact because of what happened in Eastern DRC, and it's actually come around that. The other adjustment for TMB is just the strengthening of the local currency. So in terms of, we don't see, that being resolved quickly. And my view is the rest of the country is where we need to focus on, and I'm confident that Yannick and his team will continue to push on that front. I think we've seen a stable, side of it in Rwanda, and we'll continue to be alert on that front. I think if you push me a lot further, I think we've seen, obviously sanction on that come through. Our risk team will continue to monitor that, but that has not had an effect on the business really. I would imagine these 3 key focus areas in 2026 are coming from our staff. I am guessing. And because we have a call on Wednesday, I'll pass that. We will have that discussion with our staff on some of those areas, because I'm sure they want to hear it from me. I know they know from the MDs and everybody else. So allow me to pass that, and we'll discuss with the staff in the call on Wednesday. The performance of regional businesses, I think Lawrence did, I think when I joined KCB and when we created the group regional business director, we discussed today in the board, regional businesses used to contribute 5%. We've moved that to 31%. So, when you create focus, when you put in your best people, when there is strategy and alignment, especially in the 2024-2026 strategy, you accelerate that. And people, in a number of instances, don't see KCB Kenya is growing, and Lawrence can speak to numbers. At the same time, KCB Kenya and Kenya-based businesses are growing. So the pressure on the regional businesses is to grow faster. But I'm proud of the work that the team has done to move from 5% to that 31%. I think if it weren't for hyperinflation, that number will be different today for those 2 markets. I think would be around 37, 39 if we were not accounting for hyperinflation, given the momentum that was there for Burundi and the numbers that Roba in South Sudan was delivering. Obviously, we think we should do better. If I was to reflect on that balanced scorecard, and I know our staff from across the region are online, even as we speak on Wednesday, there's opportunity to do a lot more in the region. Powered by digital financial services, delivering some of the value propositions that we've been working on. So for internal staff, tukutane Wednesday kwa hiyo call. Thank you.
Thank you. Thank you so much, Paul. Take another set of questions from Mokaya. Mwango Capital is not present, but he has asked, I think there are 4 or so questions. On Ethiopia expansion, you have previously expressed interest in Ethiopia as a market opens up. Could you update us on where KCB stands on the potential acquisitions or partnerships there and what timelines you're working with? Second question on mergers as acquisitions, strategy in Kenya, following the NBK transaction and its eventual exit. Are you actively evaluating any further acquisition opportunities within the Kenyan market, particularly as consolidation pressures increase in the banking sector? Third one, on asset quality, the NPL ratio has improved meaningfully to 16.9% this year. What specific actions or portfolio strategies drove that improvement? And where will management focus on in 2026? Yes, quite a number of them. On loan growth, the drivers, the loans grew about 16% year on year to roughly 1.25 trillion. Which sectors or customer segments were the main drivers? Lastly, on corporate lending strategy, the corporate banking loans now account for about 53% of the loan book, following a renewed focus on that segment. What specific actions? No, just hold on. I think there's a mix-up. How do you balance this push for corporate growth with the need to manage concentration risk and asset quality? I think we can take those 5, then we'll move to the next set.
Because I had curtain raised for you, so you prepare for asset quality. And I think we can share the corporate lending together, but you can also talk about the loan growth. So I'll just tackle asset quality and loan growth. Yep. I think for Ethiopia, straightforward, we remain interested in going into Ethiopia as a brand. I've said earlier on, we are actively evaluating. And when we have a final decision by the board, we shall definitely come back and communicate. At the moment, nothing to report, but actively evaluating. On mergers and acquisition, you can rest assured there is absolutely no consideration for an acquisition in Kenya. It's that simple. I think, Anastasia, you can grow Kenya 1 bank per year. So we are not going to take capital anywhere else. We'll focus on growing KCB Kenya. We divested NBK to have a single most focus on KCB Kenya. From all those fronts, including the work that we are doing on NBK, on asset quality. So, and you can see the growth, Lawrence, on loans, and you'll talk about the loans growth. So we are confident that KCB Kenya, in my view, every year, Anastasia, probably the lower part of tier 2, you can grow the lower part of tier 2 every year. So there's no justification for us to do that. As I said, Lawrence will tackle asset quality and loan growth. I think on corporate lending, we made 3 significant changes. One is in how our people are organized. It's very important. We created a regional corporate lead. We created origination within corporate and a team, but as well as we strengthened our relationship management teams. John, right? Three broad areas from a people perspective. And that's paying back because, Ben, if I'm not wrong, any bookings in the last 4 or 5 years, probably migration NPL is less than 3%. And it's starting to reflect. Yeah? And effectively, I told Lawrence he was being modest. If we didn't take the decision to increase the cost of risk, the profits would have been 71.5% or thereabout. Being prudent to do the right thing. And I think when we made those decisions and reorganized on that, and I think the other point that we need to confirm is we've deliberately taken lessons as an organization, looked back and deep dived on how we got into that position on NPLs collectively. And we are seeing the fruits of taking that action. And most importantly, reinforced the profile of credit committees, reinforced division of labor in the simplistic way of thinking, and the maker-checker at different levels, all the way to the board, and it's paying back. So we are confident into going into the growth mode. And I think I've said it in the past. And I said this of late. So if you look at, if you read McKinsey 4 Seasons of a CEO, you'll pick out exactly where we are today. There was a period of consolidating, taking over. There was a period of cleaning up and shaping it up. There's a period of growth. We've gone through, in the most basic ways, we've gone through those phases. So it is not by coincidence that we are in the season of growth. Mwango, we're very clear that that is the path we are in today. So over to you, Lawrence. Yes.
Okay, so Paul has covered the first part of asset quality, which is really how we strengthen origination. Maybe the only thing I would add onto that is we come through the sectors and set our sectorial risk appetites on the sectors that we believe were a lot riskier given the environment. Of course, we limited the amount of limits that would be willing to take. On the improvement thereafter, so that talks to new facilities that have come in from since I think 2022. A lot of the bad book has been legacy book. So we've had a 3-pronged approach that Bernard and the team has been pushing. Recoveries has been one of the big ones, and we've talked about the road bumps that you meet in recoveries, court cases, injunctions, and all those things. We've found a way, to clever way of being able to know where it will pop up and how we deal with that. And to be honest, they're also reducing. Rehabilitation has been a big item as well, and rehabilitation cannot be done in isolation. The macros must also be with you. So we've seen the macros improving across the region. And that has also helped us to be able to rehabilitate some of our customers, take the mandatory, is it about 6 months cure period before we upgrade them. And then the full and final settlements where, you look at, the facility, take a decision to take a haircut, because the money you get, you'll be able to monetize it and turn it around a lot faster, as opposed to the money just sitting and being dead to you, essentially. So those are some of the recovery strategies that the team has applied. Looking at just touching again on loan growth, the sectors. I did talk to this earlier. The main sectors that we've across the group we've focused on: manufacturing, energy, transport and communications, personal book, and SME. That sort of cuts across the regions. Each market, obviously, it will vary depending on their balance sheet size and also their appetite. But across the market, those are the main sectors that have driven the 16% year-on-year loan growth.
Yeah, that's it for that set of questions. So we'll take the last three for the online audience, and I think I'll just distribute them to you. Again, Rodens, on NPLs. While NPLs are still elevated and big acquisitions like Pesapal still pending, aren't you being too generous with cash that the business might need? One question there from an unnamed questioner. Another question, what exposure does the bank have in Iran and the broader Middle East? And what sort of impact will it have on the business going forward if things continue to be worse? Chairman, I know you touched that in your speech. Maybe you can speak through it. And the last question, and I think, Paul, this question keeps coming up around the East African Portland land. It's showed up again. So I think it's good for you to explain maybe what the process is and what is happening down there in Mavoko. I'll take those as the last questions, then we can go to the plenary. Thanks. Big cash, yes.
Yeah. Okay, so let me. So the first question. So yes, NPLs for sure are still elevated. It's a good it's a good direction of travel. You know, for the reduction, but a bank our size, we should be sitting at single digit NPL. So that's a fact. But by the time we are making a decision as a bank also not to release provisions but utilize them for coverage, it shows that, you know, from a cash management point of view, there's a clear capital and liquidity management plan. We have got to always run the business, you know, using tactics for now, but also strategy for future. So when opportunities like Riverbanks, Pesapal come along the way, you have got to find a way to execute and not let that opportunity pass you by. Paula said the future growth of this organization will come out of digital. So, you know, looking at just one aspect of let me deal with NPLs and opportunities pass you by, I don't think is a strategic way of running an organization like ourselves. But I've said we do capital planning for 3 years. We have 3-year strategy, a strategic period, and within those 3 years we do have our capital plan that is, you know, of course tweaked here and there, but by and large we do follow it to ensure that we do not put the bank at risk. And a good example is 2024. Is that when we did not pay dividends? 23. That's actually a very good example of, you know, looking at the future risks and making a decision that is painful. Because we did get bashed for that, but eventually that decision paid off, and hence why we are here paying you 7 shillings per share. Thank you.
And it's good. I can see a number of shareholders seated. I can see 4 of them and 3. Yeah, as including the gentleman, 3 of them. So thank you for joining us as always. And I think Lawrence, a round of applause for them. Yeah. I've seen passion from them since I became CEO about chairman, and maybe you'll speak about it later. Please, about the promises we made around dividend and our commitment on the direction of travel. I think, you know, you can think about the organization today, or you can think about a sustainable organization in the future. The reality of NPL today is we can boldly say we've ring-fenced the historical. I've just explained in the last 3 or 4 years the performance of the book. But you've got to say, where is the growth and sustainability of this organization going to come from? And I will not be rough to say we can't be penny wise, pound foolish. We've got to create tailwinds for the organization in future. The riverbanks, the PESAPALs, the DFS investments, the technology investments are the tailwinds for our future. So we're making those investments to release the organization, even as we ring-fence the historical NPLs and are tackling it. And thanks to the team that has been managing that. I think, Chairman, allow me to wade into this EAPC. So there is no East African Portland land. Bon, isn't it? There is no. The land belongs to KCB. Because I think it's important that EAPC had our loan, they were unable to pay, they gave us the land in exchange of the loan. It had approval from Central Bank of Kenya. And the agreement with Central Bank of Kenya is we will dispose because we are not a land selling company. That's the first phase. The second phase is the land at squatters. We had a right to sell off the land as it is and have somebody breaking down those properties and dealing with them. Or we had a duty as KCB to engage those present to say, here is a valuation of our land. This is how we are going to price. We are willing to regularize for you. We will map out the entire land in the way you are. If you have a source of income, we are happy to even give you a loan to buy the land. We've cleared the land rates pending with the Machakos County. We want to regularize. That's it. And that's the journey that we've been having. So for those sitting on the land, you are sitting on KCB land. KCB has said, we have appointed a party to regularize the land. Because in the end, we have to remove the entry of land in our books and put cash. And that's it. We will walk the journey with those who are there. Some of them have hotels. You can't run a hotel in our land and you don't want to pay. Some of them are factories functioning. You can't run your factories and you don't want to pay. So we've segmented that land based on value and we are asking them to pay. And if you don't pay, then we'll claim our land. I submit, Chair.
Yeah, I think what Paul have said on that matter is very clear. And the line we have taken is even one where one can say is very humane, that you're not just disregarding the people who are there. And it is them also to appreciate we are in a business. For us to be able to have given the money to the company that was operating and for them to give us that as a collateral, it is money belonging to the depositors. If it is not paid, and we have the shareholders who we have to ensure we are doing business with their money in a manner where they can get a return. How do we explain? So people have to also understand there is a responsibility on the part of the both sides of the equation. And I feel strongly if people can appreciate the method that has been chosen by our management team, that is very, very more humane, and where you don't just want to go and kick out and people, but they needed to be responsive. So Asante, I didn't want to say beyond that. And I think you did mention something about what we promised. You are very right. I recall back in 2023 when I joined the board, one of the key questions that kept coming as in form of text messages from people who knew me, they said, "Oh my, I hope you're going to save us," because they hadn't been paid any dividend and they felt something was terribly wrong. And in me, they thought I'll be the agent to be. Of course, I told them it is a teamwork. Joseph Kenya as an individual alone will not make a difference, but we will work with the management and the staff of our bank and ensure we deliver as part of our commitment, we as directors, to protect the value of your asset. And I'm happy. If there's anything that made me feel very happy in 2024 is when we are able to live to that promise. We promised and we delivered. Now we even did much better 2025. And I believe we will be able to remain on that path, take into account the issue that I think Rollins has addressed on the question of how do we make our business continue to do well, digital. So let's not look at you're just thinking in terms of investing. It is investment intended to make our business be more efficient and operationally and be in a position to deliver quality services to our customers, which then means we'll be able to make the kind of revenue that can enable us to pay, or to honor our, promise. So let's be assured, our shareholders, we are there committed, the directors who are here, and even those that are not here represented by them, there's that commitment. And that is why in my statement, I did appreciate our directors, our team, they're working day and night to ensure we live to that commitment of supporting. And having made that promise, we make sure it is not just mambo ya kuzungumza, lakini it is the reality. Asante.
Thank you. Thank you for that. I'll take questions from the floor. Kefa, you can start with yourself. It's okay. You can let her go.
Thank you, Chairman. I think we are more than excited as shareholders. Allow me, first of all, to laud you for not only being the powerhouse that you are, but a blueprint of the organization's brand and a trailblazer. Makofi hapo. Mr. Chair, producing such kind of performance entails a lot of commitments, a lot of resilience, a lot of hard work, a lot of effort, and a lot of teamwork. So congratulations for that. We really do not take it for a ride, but if I had money, I would have taken all of you to Naivasha to see the safari rally. But since I do not have the financial capacity, it is the other way around. So you take us. As if that's not enough, I have some questions to ask. Question 1, how is the group provisioning for potential economic headwinds in 2026, particularly in key markets like Kenya, Uganda, and Tanzania? Question 2. With Iran and the Gulf states being vital secondary market for Kenyan products, how is the company or organization mitigating the immediate threat to the trade routes currently disrupted by the Middle Eastern airspace closures and shipping suspensions? The next question, the final one, is on climate change. What efforts have you made as an organization to mitigate the impacts of the climate change that's becoming a conundrum globally? And then finally, in the midst of strong competition, what measures have you put in place to ensure you redouble your effort to protect and retain the strength of your strong brand? Thank you. My name is Sally Jepkorir and I'm a shareholder.
Thank you, Sally. I think the questions have been taken. We move to Kefa.
Good evening, Kefa Mwirore from the Nation Media Group. My two usual questions, and begin with Lawrence. This is on, you spoke of margin management as CBK rate cuts allow you to reprice loans. I'd like to understand your journey through the transitioning both your old book and new book to the new risk-based pricing model. Noting again, there's been some frustrations from the central bank, feeling like the industry as a whole has had a bit of a struggle making that transition. And of course, Mr. Paul Russo can come in as chairman of the Kenya Bankers Association, and also come in for my second question, which is on mergers and acquisition. And I will ask it a bit different from what Eric Mokaya, his approach for the same question. And some context before landing that question is, we've usually seen bigger banks buying smaller banks. Traditionally, that has been the routine. But now what we are seeing is bigger regional banks also angling to buy banks, and we are seeing them buying up the tier. And noting that you are the king, with the lion right there, would you ever entertain an offer for yourselves? Thank you. That's the question.
Thank you, Kefa.
Up quickly, thank you. You know, unfortunately, we are managers of capital. You get what I mean? So if somebody brought an offer, our duty is to table it to the shareholders. So I wouldn't say whether they will accept or not, right? I highly doubt. I highly doubt. But if somebody came with something that shockingly good for the shareholders, that would be put out there. But you know, at the end of the day, KCB is KCB. It's not just a Dukawala bank. So I doubt. But see, we are managers of capital. They bring a good one, we will table. I think, Lawrence, let me tackle the risk-based pricing because of being chairman of Kenya Bankers. Look, we went into risk-based pricing because, and we're trying to work it together with the CBK. One, because we want to grow private lending to private sector credit. We do, as a collective, right? But we also wanted a model in a way that is transparent on the pricing. And for what came out in the end as the risk-based pricing is something we collectively worked on from the original proposal to what is there. And it was bound to have teething problems, for sure. But one thing is not in doubt. We want transparency, but we also want to grow lending to private sector. Yeah. So even if you hear noise, there is a collective of understanding. And we will work out through those challenges together to try and address that. in effect, what I'm saying, it's not a one-way direction. We're trying to co-create and trying to make it work. And like any decision that you make in an organization, it will have its teething problems. And different institutions are different levels. And therefore, we are comfortable with what we're doing. Obviously, you understand the challenges with Section 44, etc., and those ones we'll tackle. You know, it's in public. But that is not a CBK issue, it's a law issue. So between CBK, National Treasury, and banks, we will try and find those solutions around that. So that's how I would answer that question broadly. Because I tend sometimes to see the people are bundled CBK, their banks, and no. We intend to continue with transparency, and we intend to try and grow private sector credit. As Sally on provisions, I think Lawrence was very clear. That is why we increased our cost of risk. To make sure that we are ready and create more buffers rather than taking profits today. Number two, on the brand, I wasn't joking. I'm lucky that the executives that we introduced a year ago, 2 years ago are here. It provides continuity. So when you talk about the brand and pushing for higher results, there is stability in the leadership, there is stability in the organization. You can be confident of performance. I saw people reading mischief when I said people are still here. My management team knows what the mischief. But you should take confidence as an investor that there's been stability in the core leadership, actually entire, of both group and subsidiary. And I should give you the confidence on continuity and push for strategy, right? You should also take confidence on the stability of the board. The new board members have only come in because the others have finished their 8-year terms. And they come with different skills. Because we replace board members based on skills matrix. So we continue to strengthen the board. You also should take confidence, Ali, that we make even changes. We split audit and the risk committee because we believe the agenda has become heavy, given our size and given how we've grown. So that should give you the confidence about going forward. I think when you talk about Iran, frankly speaking, none of us expected it to happen. It's like COVID. All of us are praying it ends sooner. But Eastern DRC, we were praying. Ukraine, we were saying it ends. Right? That gentleman seated in front of you, the one without hair, the one just after Eric. Yeah. Not that one, right? Yeah, Mark. Mark is our group strategy and innovation director. Right? We've got to crack our heads together on scenarios. Just the same way government is cracking scenarios, everyone is cracking scenarios, we're also cracking scenarios. But we're also cracking scenarios as an industry and as a country. It's early days. Everyone is fingers crossed that it ends sooner. Isn't it? If you're a Kenyan, you're waiting for 14th April, we'll look at fuel pump prices. Sindio? I have no idea which direction it will go. But those are the basic realities, Ali, if I was going to answer you about Iran. Like Lawrence has been explaining even to the board, that was where we were seeing our tea growing, Charles, sorry, from Kericho. The market for tea to Iran, we were about to close something, isn't it? That has changed. That has an impact to people like Charles. On climate change, Sally, the guy right in front of you is Eric Naivasha. He's our head of sustainability. He's the expert on climate change, on the solutions KCB is offering to mitigate this. So To answer you shortly, and I'm answering broadly, you can see how I'm simplifying it for everyone else. We've brought subject matter experts. The way he speaks about climate change is not the way I speak about climate change. The way solutions is not the way solutions. So we've brought subject matter experts because it's a critical thing to enable KCB provide value to customers. So your bank where you own shares iko step mbili mbele, iko na watu strong kabisa kama huyo Eric Naivasha. Yeah. So tuko on climate change. Sindio? Asante sana. Thank you.
Very good, and thank you, my panelists. We want to bring this to a close, unless there is a very burning question, but I think we have an opportunity to ask questions to them individually. So we'll take a photo after this before you go down. So mine is to thank everybody for your time. Thank you for coming. Thank you for supporting the brand. We look forward to having you again another time. Asanteni sana.
The importance between the partnership between Sentimental Energy and KCB was to bridge the gap between financing and access to green energy. Sentimental Energy is a renewable energy company. We do design, install, and maintain solar power. My name is Mary Nekesa. I'm at Sentimental Energy Marketing Department. What we're actually looking at today is to understand our clients more, to get to know their needs, and share more about solar.
Being a student athlete is interesting, juggling between engineering, which is a course that has a lot of content, and rallying during the weekends. The mother and daughter dynamic in the car, it's clear that I'm the driver and she's the co-driver, and we both respect each other's rules. Growing up, I spent a lot of time around my parents, so I've been quite comfortable around them. So transitioning from that into the car, it hasn't been much of a challenge.
When we're in the car, the mother-daughter thing is mom-daughter. When you close the doors, navigator driver. So you have to have that sync where you're listening. I'm listening to her. Then when we start driving, of course, she needs to listen to me now when she's driving.
I am a project manager at our family business, Samani Construction. Between work and rallying, a lot of stuff that's common, a lot of skills that kind of balance between the two. I bumped into Deep after he came back from the US. For the past, I think, 5 years or 6 years, we've been together. It's been a really fun journey. Again, we've won several championships together. Most recently, the ARC3 champions.
Mini Mkulima. We do coffee farming and dairy cattle. Nikhil being a paraplegic, so he's paralyzed from the waist down. All his controls are on the hands. For me, in the car, how I help him is a call, like when I write the notes, like pull or something like that.
Being an aeronautical engineer does help with regards to understanding your car mechanically. Myself, I'm very keen to understand how systems work. Once I understand, it's easy to then respect the system as you operate it. I really enjoyed last year. As much as we didn't win the championship, we won the races that we participated in. The sweet ones is when you really have to fight to make it to the top.
It's about trust. Over the years, you build a trust, you build a chemistry. It's about understanding one another. There is no blame game between me and Karan in the car. If I make a mistake, it's we made a mistake. If he makes a mistake, it's we make a mistake.
I own a metal fabrication company, an aluminium fabrication company. I also own a car detailing center. Safari Rally, the terrain is very different. There's a lot of sand. There are a lot of stones. So that is one thing that I can tell you really scares.
Me and Oscar, first of all, we need to think to make sure that his life is safe and the team is happy. I make sure my pace notes are on point, no mistakes. It is always hard to bring the driver down because for them, they think it is always maximum.
Apart from racing, professionally, I'm a merchandiser. I love games and anything related to engines. Rally is about consistency, it's about growth, it's about discipline. Once I'm in the car, my goal is to give the best performance that I can.
Sitting down with Queen and learning about the method she used as a co-driver was inspiring, shaping, and elevating our performance to where we are today.
Very thankful for the support we've had from the KCB group.
Without the support, it would have been very difficult for us to even contend for the title last year.
It's more than a corporate for us. It's family.
It's motivating also to see them supporting women in different spheres.
They've come in and saved us big time. I am truly, truly grateful to BPR Rwanda for believing in me from the very, very beginning.
It's amazing to us. We'll try our best to remain at the top.